Joining us now, Stephanie Link, Chief Investment Strategist at Hightower, and a CNBC contributor. We're kind of in a, we have a hybrid workforce, getting less hybrid, I guess, Steph. We've got a hybrid economy. We've got some signs of weakness, but also signs of strength. And I don't know how you navigate that. I think with higher rates, though, as you point out, roughly 500 basis points, you probably will see some effect to earnings in coming quarters.
Yeah, we definitely will. Look, this is a really challenging time, and as you just mentioned, like, we have good economic data. The first quarter GDP is running at about 3.5% at this point in time, much stronger than what most people are expecting. But again, the higher rates that you're talking about and that we're seeing certainly is going to take its toll eventually. So it is a really challenging time. That being said, I really think that this Silicon Valley Bank deal today is very good news. It provides confidence, and that's actually something that we lost in the banking system over the last 2 weeks. And the speed, Joe, has been incredible. So to see this deal get done, that's a good thing, number one. As I mentioned, it does provide confidence, number two. And I'm hearing also, and I think you guys have been reporting it, that the deposit situation is calming down. So that's really good news. That being said, the financial conditions are getting tighter. Maybe that's going to do the job for the Fed if the Fed doesn't raise going forward. But we have to wait and see in terms of how much we're going to slow down.
It does free up, maybe this new stability frees up the Fed's hand to maybe continue its inflation fight. We were one of the silver linings, to when the Fed seems to be maybe breaking something, is that they go on pause. Are they back on track? Do you expect them to raise again? Will they get to the target of 5.5%, 6%?
Well, yeah, I mean, look, we get a very important number on Friday. The core PCE number is going to probably come in at about 4.7%. So to your point, inflation is still pretty high. We know the Fed wants to get that number closer to 2. So let's just see what that number comes in at and how they react. I don't think they're going to go. I thought that Powell sounded pretty dovish last week. But as I mentioned, I think the tight financial conditions in the system, led by the banks and this bank crisis that we just went through, that is going to slow things down. So does that do the work for the Fed kind of thing? And I'm leaning in that direction. Look, all that being said, there are places to be investing. I'm a long-only manager. I'm always looking for ideas. And I think this year you have to have a little bit more of a balance. Last year I was much more cyclical. This year it's much more of a balance between growth and value, and just looking for opportunities. Where?
And give us some.
Yeah. So most recently, I bought back TJX. I know we've talked about that in the past. I think the consumer is actually hanging in there. They're benefiting from better inventories throughout the industry. They have pricing power, and I think margins are actually going to expand, especially as freight costs come down and you lap some pretty easy comparisons. I like Keurig Dr. Pepper, which is a little bit more defensive. I think that their cold business is doing quite well. And I think their coffee business and the concerns about tough comparisons are overdone. It trades at a 16% discount to Coke and to Pepsi. I bought Schwab 2 weeks ago. I felt a little foolish at the time, but I do like the name very much. I think that they've got about $100 billion in cash flow from their cash operations. They have $300 billion in liquidity that they can get from the government funding. And so at 14 times earnings, the CEO's buying shares. I like that one a lot as well. And then, the sleeper this year has been GE. That stock's up 39%. And I also like GE Healthcare. So they spun off GE Healthcare. They're going to spin off their power gen business next year. And so it just gets to be a simpler story, and the valuation is pretty attractive. So a lot of different places to put your money at this point, and just using the dislocations that we get to be looking for opportunities.